Hey everybody, my name is Shikha and I'm with HOMGURUS team at eXp Realty. And here we have Rohit Sarogi with Absolute Home Mortgage with us to answer some of our most common questions that we get about, is this the time to invest in real estate? So thank you, Rohit, for taking this time to be here with us. And I just want to dive right in. So my first question to you is, with the interest rate so high, does buying an investment in real estate make sense right now? Is it worth it?
Thank you, Shikha, for the introduction. And it's absolutely a phenomenal question. It runs in everybody's mind. Interest rates are so high. Um, I think if we go back 15 years, 20 years back, the rates were in the teens and still people were buying. And I think people will continue to buying investment homes. I think it makes a lot of sense. We just have to work on the numbers at that point of time for that particular property to see how the cash is flowing. I think, in my opinion, investment homes are a great wealth building vehicle in this country. I'll give you an example why I say that. Assume that I need $1 million to retire. If I have to actually save that $1 million, it's going to take a lifetime for me. Pretty much, I don't even know if I'll be able to get there. But now I come to you and I tell you that, Shikha, I need $1 million, and you actually find me 3 homes of $300,000 each, close to $1 million in today's market value. So that's about $900,000 or maybe $1 million. I come down with a 20% down, so that's approximately $200,000. Over a period of 20 to 30 years, this $1 million investment that we have just invested in is going to be at least 1.5 to $2 million. I didn't need $1 million to create a wealth of $1.5 million to $2 million. I just needed $200,000. And I'm not saying that I should start right away into buying for $200,000, but I can take the first step of coming to you and seeing that, okay, can you get me a home for $300,000? At that point of time, we can see how the numbers are looking at based on today's interest rate and see if it is cash flowing and take it from there. But I really think that investment homes are a great vehicle.
Awesome. Thank you for answering that. So I do want to talk about, the advantages of investment. That's very important. Like why do people think that that's the best use of their money? So how do you think that can be accomplished? Some of the aspect that we think that the long-term aspect of investment, what are the advantages for us?
If I have $75,000 sitting in my bank account, there are 3 options I have that money to grow. Either I invest in a business, which is very risky. I mean, what we are talking about, literally 3% of the new businesses make up in the first 2 years, or I invest it in the stock market. But I personally don't have the courage of putting $75,000 in the stock market in one go. So the third avenue that comes to my mind, which makes sense, is investment homes. The good part about the investment homes is it's the equity. It's not a speculation. There is equity, there is land, there is an improvement on the property. And the money continues to grow over a period of time. So I hope that was understandable of why I feel more comfortable that why a $75,000 investment in an investment home is a little bit more comfort zone than putting it in a business or a capital stock market.
Right. Understood. So let's talk about, how do I finance such a real estate investment? Like, what are the steps that I need to think about or know about?
Yeah, so the first step is to do a pre-approval where the client comes to us. We do the analysis. We see that, okay, are they okay to buy the investment home? Then we obviously, you partner with them, you find them the right home that they're looking for. And then we also circle back. We are in partnership with you and the client to see how it flows in, whether a 20% works for it, whether 25% works for it, or in fact, there is a program where we can even do it at 15% down, also works for it. And based on the cash flowing, we can see how it makes sense, or the client can decide whether they want to go with just a 20% down, a 15% down, or a 25% down program.
Understood. What about your, what are different investment strategies or goals that one must think about when they're thinking about real estate?
The most important goal, I would say, is the long-term goal. Like, if I want to retire, I need $1 million, I need a $2 million. How to achieve that goal? Or it could also be for, say, my kids' education. Say I need $300,000 for my child's education, and I have two child, so I need $600,000. I think that's where the goal sets in, and then is how to reach that goal, how to reach that destination. And I'll take the same example. Let's assume that I just have a baby now, 1 year old, 18 years to go. I need $300,000. Again, I come to you, I'm like, Shika, in today's dollar terms, I'm going to, can you help me buy a home for $300,000? Again, this is in today's dollar terms. So for that, probably I need $60,000. You don't need to have $60,000. It's a way of looking at it. And over a couple of years, maybe you can help me buy that home. And when my child is 18 years old, that investment vehicle can actually pay off for the college. I don't have to come up with the entire $300,000.
Right. Makes sense. Makes sense. So like we talked about something very briefly, right? When we talk about investment strategies, we think about, so does it mean that if I'm spending that $60,000, I have to see some money coming back to me right away? We talked about the, what can I expect when I put down this kind of 20% down?
So there is three options you have. You can be positive cash flow, so a little bit money coming into your bank account every single month, maybe 100, 200, $300. You can be just neutral, where there is no money coming in, but there's no money going out. You're absolutely the same. Or there is that little bit of negative cash flow where maybe you are putting in maybe 100, $200 every single month from your pocket. And what happens is sometimes, like when we have to move the car in front, and sometimes you have to reverse a little bit and then move forward. I feel the same thing with a little bit on the negative cash flow, because you are building a lot of equity, a capital equity in the back end. If you're okay taking that maybe $100 or $200 negative cash flow, maybe it makes sense to look into that and not just absolutely remove that from your mind. If you're neutral, I would totally go with it if I'm neutral. If I'm positive cash flow, it's nothing to talk about. Go for it 100%. But I still feel that sometimes when we are just a little negative cash flow, we may want to consider it.
Right. Right. I think you bring up a very good point. In what scenarios would you be in negative cash flow, right? Because of the interest rates that are current for the investment properties, right? So again, going back to our basics of, even if the interest rates are slightly higher now for investors, do you think that that could easily turn around at some point later this year, maybe next 2 or 3 years down the line, where that can be refinanced and that negative can easily be recuperated, but with the price that we have bought now?
That's a great question. And I'm going to actually share my personal example on this. I bought my first investment home in 2009. And the price of the home was about $200,000. The interest rate I paid was about 5.75%. My monthly payment was 1,050, and I was getting a rent of $995. So I was just a little bit negative cash flow, which was okay. I was like, you know what, I'm young, I'm okay, I'm going to be doing well for myself, I'm fine. Guess what? The next year, the rent went down to about 950. So I was a little bit more negative cash flow, but I was like, it's fine. I believe in it. I'll go for it. After 3 years, number one, the interest rates I was able to finance from 5.75% to 4.75%. Number two, the rent that which had gone to $950 went to $1,100. So I got two upswings with that. My mortgage payments went down, the rents went up. So I feel the same thing, that when the interest rates are high now, there will be an opportunity to refinance. But when the interest rates come down, maybe the home is not going to exist that time. So it's a good time to explore, even with a higher interest rate, get the home. That's the most important.
Thank you. You're hitting the nail on the head right there. I think that's what we're trying to convince, or not even convince, educate our clients and out there thinking now is the time to buy. The prices, the you are able to negotiate what you would want in this market to buy, even if it is cash flow negative. You, in this sense, it would still make sense to buy and not to stop looking for investments if that's a strategy you want to follow for 2023. If you want to go grow in your real estate investment strategy, I think thank you for hitting all of that straightforwardly in terms of it's a great vehicle to build wealth. We have seen some of the greatest in, that have set example for us in front of us, is that real estate is a great option if you have a little bit of money to put that down and then let it grow. It's like you're sowing that seed out there and letting the tree of wealth grow further out, because you not only have your equity that's being built, you don't only have somebody else paying that, monthly bill for you. You have appreciation, you have your tax advantages, you have so many advantages around just putting that vehicle in place for yourself, your family, your kids, that it is always a great idea to invest in real estate.
Absolutely. I'll just share one more thing, if I may. We'll take the same example of the $300,000 home that, say, you help me buy, and I take a mortgage out with 20% down. So I come down with $60,000. Let's assume that the home is renting for maybe $2,000. We are just making up some numbers right now. Over a 15 to a 20-year period of time, the rent is actually not going to remain at $1,500 to $2,000. The rent is actually going to jump to almost double of it, right? Just inflation aspect of it. So that means the same home now is actually going to get me double the rent. So that'll go to maybe $4,000, right? My mortgage payment doesn't change, fixed interest rate, right? That's the beauty of the mortgage. Taxes may go up, HOA may go up, home insurance may go up, but the 60-70% of the bill, which is your principal and interest, doesn't change, stays where it is. So now my cash flow goes absolutely amazing in 15 or 20 years. And that is the power of mortgages. I take the same home, but now I buy it in 100% cash. The home continues to grow at the same rate. The home doesn't know whether it's a mortgage home or it's a cash home. So it makes a lot of sense. I feel that if you can use a mortgage to buy the investment home, the yield factor is so much higher over the long run.
Absolutely. Absolutely. And you can use the same much money. Like if I'm using 300,000 cash to buy one, I could use that money to buy actually three and see the same results coming out of it in 15, 20 years, right? So if you bought one investment, don't stop there, because you need to grow more plans out there to that wealth keeps building for you. So as soon as you accumulate a little bit of down payment, put it out there to help you grow that investment. I think this is a great conversation. Thank you so much for having this time to talk with us and educate and just bring up some basics about investments in real estate. Anything else you want to add?
Once a client understands this powerful tool, I can almost promise you, Shikha, they will not stop. They will come back to you again. Get me my second investment home, get me my third investment home, get me my fourth investment home. It's just the first one, it's the hardest one.
Right. And that's why we want to just put it out there. If you're thinking about investing and you don't know where to start, just reach out to us. And I think we can help you with the basics, the tools that you need to just get your feet inside the door. Once you do that, you would see what the power of that is and why people have been doing that for years and why people find that there's so much success and wealth there, because it just shouldn't stop at one. But to take that first step, it's the hardest. And that's why we are here to help them get started.
Absolutely.
Awesome.
Absolutely.
Great. Thank you so much, Rohit. I think this is great. And we will be putting up another one shortly, which will be talking about how to even get started with buying for your own self, how to start with the first time buying process. And that would be our next conversation. So let's keep these going.
Great. Thank you for the opportunity.
Awesome. Thank you.